What's up, everyone? It's Caddy with MoneyVest. So markets here seeing a little bit of a bounce. The NASDAQ, S&P, and the Dow pushing higher. But I've got a very important headline to break down because it's not like every day you hear from the biggest hedge fund manager in the world talk so boldly about the future of the United States. So that's what we're going to discuss. I've done tons of videos on this topic already in the past, but we're going to talk about this in more detail in this video, and I'll actually be doing a separate, more dedicated video once again on this topic, talking about the situation that the US is in and what the path forward might look like in the future. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining. There's only 2 more days left, today and tomorrow, for that 16% annual discount. I've opened up a couple more spots because people have been asking, so link's going to be down below if you're interested in joining. And of course, you get access to everything: buy and sell alerts, members only private videos, trading view charts, all the benefits, educational tutorials, stuff like that. So link's going to be down below, and we'd love to have you on board. So this right here is the GDP numbers. So year over year coming in at around, actually quarter over quarter increasing about 2.1%, which was slightly below the consensus expectation. And the PCE, the personal consumption expenditure, increasing by 0.8% versus consensus of 1.7. So this was actually a very bullish catalyst for the market as soon as the numbers came out at around 8:30 a.m. Eastern. And the reason for that is because the GDP grew at a slower rate than what the consensus was, and the PCE is what the Fed's preferred measure of inflation is. The personal consumption expenditure grew at a slower rate also than what the consensus was. So both of them actually played out really well. It's not like we're looking at of course, 2.1% is still a very strong economy, but it's not as strong as what investors were expecting, and inflation, in other words, the PCE, was not as high as what investors were expecting. So both of these numbers hitting on the lower end of that consensus range. In fact, the PCE was a huge surprise at 0.8%. And that obviously resulting in a bit of a rally here in the markets, and of course seeing a bit of a bounce on a technical basis after being oversold for so long, selling off consistently over the last few weeks. It's only normal for the markets to push back higher. But the big headline that I'm talking about is this. Ray Dalio says the US is going to have a debt crisis. This is about as bold as I've ever seen Ray Dalio be. And he says, we're going to have a debt crisis in this country. This is in quotes. I quote, "We're going to have a debt crisis in this country," the founder of the hedge fund Bridgewater Associates said in an interview with CNBC's Sarah Eisen that aired Thursday. Literally today, this is what he said. One line. And I feel like this is probably one of the most important statements. And I'm not kidding. This is not an overstatement, guys, because look, we've been through this before. And yes, we were not alive back then, but we've gone through 500 years of history where different superpowers, different countries have been at the top of the mountain, and they have had the pleasure, they've had the opportunity to be the reserve currency of the world. But all these countries, what they have in common is that they have taken advantage, they've taken it for granted to print all this money, take on a lot of debt, get involved in a lot of military issues, and of course, eventually have had to, concede to the next gaining power, which, of course, look, and here's the thing, right? You gotta take this with a grain of salt. Like, I know there's gonna be some skepticism with the statement here because Ray Dalio is pro-China, right? He's always been very much interested in the growth in the Asian countries, especially China. And China has been growing at a much faster rate. And of course, we know what the policies are like over there. But you can't take away from the fact that the spending from a fiscal side in the US has been very mismanaged, and it's been very erratic, so to speak. Every single year, the US is running deficits. Every single month, it's doing new issuances. I just did a video yesterday going over how last week, or actually this week, was another $132 billion of government debt just hitting the markets. And now, over 30% of the tax receipts are going to be spent on interest alone, which is now over $1 trillion, right? In any given year. $33 trillion is the debt levels that we have surpassed for the first time this month, and lawmakers negotiate U.S. spending bill before the October 1st deadline. A failure to reach an agreement could mean a government shutdown once again and risk the perceived risk of the country's debt again. right? This is just an ongoing thing. Like, we went through the same process in December, went through the same process earlier this year, and now we're going through it again. And he says, how fast it transpires, I think, is going to be a function of that supply and demand issue. So I'm watching that very closely. U.S. debt levels, of course, have ballooned in recent years, especially after a roughly 50% increase in federal spending between fiscal 2019 and fiscal 21. And of course, there are estimates that this number is going to hit over $50 trillion in the next, I think it was 10 years, or might have been a little bit shorter. But point is that their debt levels are not going down, right? And the moment any country starts to take advantage of the opportunity that they've been given or they've earned, that they can print more money, they can continue to print more money and issue debt, is when things start to go southways, south, and of course sideways. And the problem is that, look, it's not going to be a problem in the short term. It's not going to be a problem in the next 5 years, maybe, or even 10 years. But this is a longer term problem, right? Longer term problem meaning what is, the next 50 years look like for the U.S. versus the rest of the world, right? That's really where the problem comes in, and that's why, we've got a younger audience. A lot of my viewers are somewhere between 25 and 34, right? It's probably the same age as I am. I'm 26. And even for the older population and the viewers, it's still something that you need to be aware of and be prepared for, because, look, you're going to have family, right? You have children, you have their children. So you need to be looking forward to, okay, how are they going to position themselves in this global economy, and what's going to be the next superpower? Because, like I said, we've gone through 500 years of history, and no country has had the chance to, last over 120 plus years. So that's why it's a longer term problem, and the longer term solution obviously is going to be discussed. It's going to be talked about, and what's going to be that happy medium between, of course, there's BRICS, there's European unions, of course, there's the US, the NATO, and all those different things. So obviously global economics very much more complicated than just looking at the US and, of course, last 100 years and being like, okay, if this has worked, this is what's going to work over the next 100 years, because it doesn't work like that. This right here is investors fear interest rates may keep rising as the U.S. situation worsens, hurting the demand for treasuries, and Dalio is concerned there are more headwinds for the economy than just high debt levels, saying that growth could fall to zero, give or take 1 or 2%, and I think we're going to get a meaningful slowdown in the economy as well. So I'll talk about this in more detail in a separate video. I know this is more about the market update on the day, but this is something to think about, and we've done videos on this, and it's going to be a growing concern, I think, among investors in the U.S. because yields are on a mission, right? I did a video on this yesterday or earlier today that 10-year yield is on a straight-up mission, and that's obviously causing a significant decline in treasuries because of the supply-demand imbalance, which, again, I've talked about, been vocal about so many times. Now, talking about the next rate hike, I've also been talking about how I do believe that there is going to be one more rate hike in 2023, and BlackRock's rater thinks investors should believe the Fed that it's going to hike again. So it looks like some investors are starting to get around to the idea that the Federal Reserve is going to raise rates one more time. And he says, and I quote, "You've got to take them at their word that they are going to get another 25 basis points," said the asset manager. "I don't agree with doing it because the data would suggest you can start pausing. I thought we're going to start pausing a while ago, but I think you've got to assume when you invest that they do what they're telling you." And that's how I think the best way to go about it is like expect the expected, right? Expect what the Federal Reserve is basically telling you, because if you start to expect the unexpected, that's what opens it up to surprises and disappointment, and of course pleasant surprises too. But at the end of the day, like Federal Reserve sold us 25 basis points, for a very long time. Inflation is not down to the Fed's target, and economy continues to be strong. We just got those GDP numbers. 2.1% growth is pretty good in my view. So I think the Federal Reserve has maybe one more rate hike left in their toolkit for 2023. I could be wrong, and that's okay, because again, we're not here to make predictions. We're here to react to the market circumstances and understand, okay, what really is happening in the current market environment, given what we know right now. So this right here was Josh Brown saying that AI bubble popping is the biggest risk to this market. Now, I'm kind of surprised that he labeled the AI boom as a bubble. As I mentioned before, that I don't believe this is a bubble. This is not like a technology that doesn't exist or something that not been materialized. I mean, these are companies that are actually focusing on AI. And all these companies are very, very, very established, right? Profitable. All of them are profitable. All of them are established. All of them have material gain from artificial intelligence. So I think there's a very subtle difference between calling something a bubble versus calling something overpriced and overexpensive. And that's, I think, really what it comes down to. I don't believe, and I kind of disagree with Josh Brown's kind of phrasing of AI bubble. I believe that, yes, these companies are trading at an expensive valuation because of that AI boom, because look at Nvidia up 192%, right? Just this year. Revenues and earnings have not gone up that much, right? Tesla's up 119%. Revenues of earnings have not gone up that much. Meta 134%. Again, revenues and profits have not increased 134%. So how is it possible that stocks are up more than the actual fundamentals? That's the overexpensive premiums that investors are paying for these companies, for these stocks. But that doesn't mean that they are in a bubble, right? Bubble would mean something that doesn't really exist. It's just, that's why bubbles are transparent, because there's nothing in there, right? That's what happened with the tulip mania. That's what happened with the dot-com bubble, because the revenue and the earnings weren't there. It was just a story. And that's what happened with Bitcoin as well. It goes through different cycles. But when it comes to artificial intelligence, the technology is real. It's literally, we're interacting with it every day. So yes, it's expensive, but I disagree. I don't think it's in a bubble. AMD is obviously a very strong move to the upside today after Microsoft Tech chief touts chipmaker AI products. Now, I've been doing videos on AMD for some while. I specifically did a video that Nvidia, you better watch out, because AMD is going to be coming in strong at this artificial intelligence boom. And guess what? Shares of AMD rose 5% Thursday, a day after Microsoft's technology chief said the chipmaker is bolstering its position in artificial intelligence, where Nvidia dominates. This was literally exactly my thesis behind Advanced Micro Devices, because I mentioned that, AMD is not going to hold back. Lisa Su, I trust in her, and they're going to be launching some very, very amazing products by the end of this year, which is going to obviously create that competition in this sector, because Nvidia right now still dominates about 75 to 80% of this market. So AMD, lots of potential. Don't sleep on that stock. I know everyone's been focused on Nvidia, but AMD has untapped potential right now, in my opinion. Now, artificial intelligence is a huge variable in the market heading into the year. This was, again, Josh Brown. And I think AI is the biggest risk to the market. Yes, I'm excited about AI. I'm flesh and blood. Also very worried that we may have gotten too excited too soon. And I think that presents a fairly substantial psychological risk to the market into the year end, is also what he's talking about. So this was the market. Very, very nice, decent bounce. We got Nvidia, Meta, Google, AMD, Tesla, all pushing higher. Amazon about as flat as it gets. Apple flat. Microsoft flat. We did have, of course, financials pushing higher. We had a little bit of industrial action. Real estate pushing up. Basic materials. Utilities definitely selling off. Now, I will be doing a video on Nextera Energy. I know a lot of you guys have been asking for a video on Nextera, Micron, all these companies. So we'll be doing in mode. I will be doing videos on those companies. This right here, again, the entire state of the market. So over the last 1 day, utilities are the only one that is down 1.87%, and everything else obviously pushing higher. In the last 1 week, we've had energy see the biggest gain. Everything else is basically flat or down. In the last 1 month, most sectors are down. Energy is the only one that's up 4.3%. I actually had to do a video on energy prices, because they're now hitting over $92, $93 a barrel. So if you come over to US crude, we're sitting at $92 a barrel right now. And we've seen a very nice move to the upside. It actually got up to as much as $95 a barrel. So we're very, very close to getting up to over $100 a barrel. That's obviously going to be a pretty big move, and eventually will put pressure on inflation. And we'll find out in the next couple of prints. But this has been a monstrous rally in crude, right? I mean, 41% move since June. And of course, right now we're getting a little bit of that rejection at 93.60. But if we do see a very sizable breakout, the next resistance is going to be at 97. That's going to be that next target for crude, all the way up to, of course, the triple-digit number at $100 a barrel. This right here is crypto, so getting up to over 27,000. Ether a little bit over 1,600 right now. And crude oil we just went over. Volatility coming back down from 18, 19 levels. Again, we talked about this in our yesterday's market update and in our Discord as well. So here's the thing that's actually happening in the market right now. We are seeing a short-term rally because the technicals are so oversold. We've got the RSIs, the MACDs, the percentage of stocks trading below their moving averages, the volatility, the yields, there's the dollar, and of course the crude oil. Everything is lining up for a short-term rally for the market because stocks are oversold. They're coming down to their support levels. Volatility is hitting its resistance and getting up to that 18, 19 level. We had a lot of stocks traded below their moving averages. So once again, coming down to their initial support levels and that initial threshold of over 90% or 80% of stocks trading below their moving averages. So it is very, very common from a technical standpoint to see a little bit of that rebound for the market. So if you come back over to the S&P 500 here, what you'll notice is that we are seeing a very nice move to the upside from that support, from that green circle that I pointed out. Last couple of days we did sell off, and right now we're just sitting at that higher low. So you can see this is a very, very important higher low, right? I mean, this is literally the support that we talked about at around 42.65 to be more precise. Yes, 4,300. So again, markets are chaotic, right? There's no precise number that I can tell you that 4300.0. There's nothing. There's no number like that. There's always going to be range, because markets are chaotic, right? They don't work in this orderly fashion because of all emotional activity that's involved, because of all the sentiment that's involved. So 4,300, yes, we talked about that, closing in just under 4,300 right now. But this is the higher low. This is where the markets are starting to see that support. And of course, the volatility is lining up, yields are lining up, the dollar index is lining up, and a lot of percentage of stocks, the technical breadth is also lining up. So we're seeing a bit of a move back higher, but the important thing is going to be whether we break back above this right here at resistance at around 43.25, roughly around 43.20s. If you do see a breakout back above this level, it is possible, and this is something that I mentioned in our Discord, it's possible that we do see a rally back up to 44.75. So that lower high is a possibility for the market, because you'll notice that we have just been trading in this downtrending channel, so lower highs and lower lows, and right now we're hitting that lower low in the context of this downtrend, but we're also hitting a higher low in the context of this broader uptrend, right? So that's going to be this right here. So yes, there's two patterns working in tandem with each other. So right now we're kind of coming up to that higher low in the context of this bigger uptrend, and the lower low in the context of the shorter downtrend. So hope that makes sense. So if you do see a rally back up, this is going to be that first level of resistance. That's going to be a lower high, sitting roughly at around 4,400 for the market. That's something to keep in mind. Talking about the NASDAQ, again, very similar, right? So getting a bounce from this lower low inside the context of this downtrend. So we're starting to see some buyers step back in. And if you do see some reasonable gains here for the NASDAQ, it is possible that we do trade back up to 14,000. That's going to be this level right here. That's going to be in line with this lower high, and possibly even at 14,100 in line with this previous horizontal resistance for the NASDAQ as well. Talking about Apple, and Apple here getting a bounce back higher, so that's good. This right here will be turned into a resistance. So look where we got rejected today. The high for the day, 172, which was previously a support at one point, right? So 172.03 is where we got rejected for Apple. So, we broke down. We're coming back up to retest that old support as a new resistance. So if you do see some more selling pressure, it's possible 157 is a possibility, continuing to trade in this downtrending channel of lower highs, of course, and lower lows. So that is going to be something to keep in mind. Talking about Amazon. So Amazon here also starting to see a little bit of that momentum. So we gapped down and then pushed back higher. Wow, it almost feels like Amazon didn't even trade today. Absolutely zero. No gain, no loss. About as flat as it can be. Closing at the same price as it closed yesterday. So getting a move back higher. We did see a breakdown below 126, but of course closing in at just shy of 126. So right now we're starting to see a bit of a breakdown from this uptrending channel. So next support, really, the stronger support is going to be sitting roughly, I would say, at around, well, there's going to be some level of support at 121, so previous resistance for Amazon, and there's going to be a much better support sitting roughly at around $114 per share. So those right there are going to be some levels to watch for Amazon. Talking about Tesla, And Tesla here getting bought up at 240, so not a surprise. So low for the day was 238. So we're seeing a lot of buyers step back in from that green circle that I pointed out. So that is a very important level of support. Higher lows also forming right there for, wow, my hairdo. Tesla right there at $240. So this right here is going to be that support. And of course, we've got that higher low sitting right over there for Tesla. So we got that confluence of support sitting roughly at 240, and that next resistance is going to be that lower high at 267 for Tesla. Talking about Nvidia now, and Nvidia on the day pushing higher really well, 1.4%, $430. So it's been quite an interesting chart, right? It hasn't really seen a lot of momentum to the downside. I mean, it did sell off from highs of 498, close to $500, down about 18%. But 18% is literally nothing for Nvidia, for a stock that's rallied almost 200%, right? So support level is going to stay put at 399, close to $400. So low 400 is going to be that level to watch. Right now we're seeing a bit of a momentum back up. So RSI and MACD again oversold here. So buyers are stepping back in. Technical bounce is very reasonable. AMD, I'm kind of surprised. Again, this was catalyst driven, so no one could have actually seen that. But a very, very solid move back higher. I mean, this is a huge breakout once again on decent volume. And we're back over that $100 threshold. So my dreams of selling a put on AMD are going to have to be put on hold until, of course, we see AMD come back down. But this is a very, very nice move to the upside. Of course, getting back over that $100 threshold. However, we're still, I would say in the context of this lower high, lower low. So that's something to keep in mind. And we'll see if you actually do get rejected at this lower high, or if AMD can break past this level on this news. Now, these catalysts do fade fairly quickly until, of course, there's some material news and AMD launches new products and they're seeing a lot of feedback from their customers. So it's possible that we do come back down and retest that support at 99, close to $100. So that's something to keep in mind. But I wouldn't shy away from dollar cost averaging little by little, slowly and steadily. Even at these prices, of course, ideal would be $80 or as low as $60 for advanced micro devices. Talking a little bit about PayPal. And PayPal here also seeing a bit of a bounce back higher, 1.4%. So PayPal chart is going to be over here. Very nice move to the upside, up a little bit over 1.5%. This right here is what we have talked about as a support at $57, $58. But of course, it tends to be very, very weak right now. That's exactly why I wouldn't be surprised if it does end up breaking down below $57. When patterns are trading at their support after a huge downtrend, the probability for a reversal is significantly lower than something that is trading in an uptrend and it's consistently hitting new 52-week highs. Hope that makes sense, right? It's all about the trend, right? The trend is your friend. So if you are trading this on a reversal, and I'll go over that with end-phase example as well, the probability of success is lower, but the profit potential is the highest. Versus if you are trading something like this, which is on an uptrend, probability of success is high, but the risk reward potential is also low. So hope that makes sense, because that should help you kind of better understand and develop a framework around risk and reward. And what exactly is it that you're trading? So PayPal, $57 right now, looks very weak, right? It's just the fact. It's the truth. It looks really weak. Wouldn't be surprised if it breaks down below $57, if there's a big volume, flushes down below that level, if the NASDAQ also continues to be weak. So RSI, MACD, very, very oversold right now. No doubt about that. Support level is 57, so it is possible that we do see a reversal, but it is weak. And the probability of that is also far lower than that of a breakdown. Square here, seeing a very nice move. 42.77 was the low for the day, so perfectly validating that support. Look at that. This right here, a long wick to the downside, perfectly coming down. RSI, MACD oversold. So this is a potential trade idea now that can come up, but there's no confirmation for a trend reversal yet. So if you come over to some of the moving averages, we're still very much in this short downtrend where we are selling off pretty aggressively. We haven't really broken out of any of these moving averages, right? So the 9 EMA is still far ahead. I mean, if you go over to the 5, right, that is going to be, again, very, very closely tied to the price. And we haven't broken out of that moving average yet. None of them have been broken out, and the price has just been selling off. So I would say be careful. There is opportunity from a risk-reward standpoint on Square. I mean, if it does trade back up to its resistance of $50, that's a good 14-15%, and that supports at $42. So we're only really risking about 3 to 4% to actually make 15 to 16%. That's a pretty good risk-reward trade-off, but at the same time, like I said, probability of that happening is low. So it's a good risk-reward trade-off, but probability is low because it's already so weak, and there's no confirmation for that trend reversal yet. So we'll talk about that in our Discord in more detail and what this actually ends up looking like. Meta here, on the other hand, a very nice move to the upside, up over 2%. So coming up to its resistance again. Meta's held up really well, similar to Nvidia. It hasn't really sold off at all that much. So support level, of course, we've talked about at 260s, and resistance all the way up to $307 for Meta. Talking about Netflix here, Netflix just consolidating sideways, trading at that support. So very similar to Square. Potential risk reward here and a trade idea. RSI MACD oversold, so there is opportunity. Risk is just a little bit under 370s, and resistance and target's going to be at 400. So the reward potential is not that high for Netflix right now, unless of course it trades back up to 452. Then of course we're looking at a 20% upside. But right now we got to wait until there is confirmation from a lot of these moving averages, because you can see the overall trend has been very much to the downside. It's been selling off pretty aggressively. Google here, seeing some momentum back up. Very nice breakout past 131, so up over 1.27%. So this right here is the level that we talked about as a resistance, getting a nice breakout back higher. Support level is going to be 127. It looks like we have filled this entire gap for Google, which we left a few days ago when it gapped down pretty heavily. So again, tomorrow we'll find out what happens. Last day of the week, last day of September, last day of the quarter. So we've got lots to look forward to tomorrow. And again, support level is going to stay put at 127 for Google. Talking about Microsoft here, Microsoft also seeing a bit of a bounce back over 313. This is going to be that resistance at $314 right now, and support level all the way down to as low as 292, and resistance all the way up to as much as this lower high at $330 for Microsoft. And finally, we get to Enphase Energy, ENPH, and of course Shopify first, but Shopify here also getting a very nice bounce from that support. We didn't quite fill the entire gap, but it's coming up to that resistance at $54. Again, very oversold. So RSI MACD also showing signs of some potential reversal here on a technical basis. And finally, we get to Enphase. Enphase also just consolidating sideways, trading at that good deal area, and that support at 116 was a low for the day. There is bullish divergence, so there is everything lining up in the stars for Enphase to see a lot of momentum in the future, breakout over 128 again, breakout over 151, and start to see that momentum back up. But it is weak from an overall price action standpoint. So like I said, it is a triple bottom, right? So there is high probability that it gets bought up at these prices. Like I said, 1, 2, 3. 3 times it's been trading at these levels and it's been bought up. But that doesn't mean it's going to happen, right? It's all about probabilities. It's a game of odds, right? Trading is. So yes, while the probability is high for us to see that reversal back up, bullish divergence, triple bottom support, even then, I mean, the price action is weak, right? It's been selling off. So we can't take away from the fact that every single week it's just been on this consistent decline, and it's been on this very, very significant sell-off. So if you do see higher volume, if you do see a flush below $108, $105, we got to be ready, right, to see sub 100. But anyway, so I did dollar cost average a little bit on Enphase nonetheless, but hope you guys enjoyed this video and found it helpful. A little bit of a longer one because we had a lot to discuss in today's video, but let me know in the comment section down below, what do you think? As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel. So always happy investing, and I'll see you all in the next video.